Hello. Welcome to this Blueberry live stream. It's been a while since we've done one of these. My name is John, Senior Market Analyst. I'm going to be taking you through some live Forex market analysis today. We're going to be going over some of the fundamentals that have happened in the market, some analysis, and some questions as well. If you guys have any questions, please feel free to type them in the chat. Hit me up with a welcome back. Hi, Ratish. Thank you for joining. Just want to give a shout out to Ratish, actually. Thank you for all your comments and feedback recently. Definitely stuff that we need to take on board. So I'm going to follow a bit more of a structure today. We're going to be going over the fundamentals first. We're going to go over some headline data as well, because that's really important coming up. Obviously, we've got the US elections just around the corner, so I want to touch on that a little bit as well. We've got some commitment to trader report data as well that I found are very interesting this week, and a couple of plays that I'm looking at the moment which are starting to bear fruit a little bit, and that's something I'm going to be looking at going into today, and then we're going to do some analysis and just some questions from you guys as well. But good afternoon to Vincent as well. Thank you for joining. I know it's been a little while since we've done the stream. I can't remember the last time we did one. I think it's at least 3 weeks ago, maybe. I have been on holiday a little bit as well. So yeah, we did a whole rebrand as well. I hope you like all the graphics and all the new graphics and all the new layouts of the videos as well. We're putting a lot of effort into producing all this new content for you and whatnot. So I hope you've enjoyed that so far. So yeah, let's get straight into it. Let's dive into some fundamental analysis. I'm just going to bring up our Forex calendar as we usually do, and then we'll go from there. So let me just bring this up for you. There we go. So let me zoom in as well. So we've had some really interesting data coming up this week already. And there's been a lot of headline news as well, but I'm going to cover that in a separate sort of section of the live stream today. But I'm going to cover what's gone on recently, whether the market's kind of taken much notice of it or not. And then we're going to go on to some of the more fun stuff, the trading stuff, right? But some things that have really stuck out to me this week, obviously the Japanese elections that happened over the weekend, that was something that really stuck out to me as well. We have the LDP party, so the Liberal Democrat Party in Japan. They basically faced a little bit of tough competition from the opposition, and that has caused some volatility in the Japanese yen recently. We've had the Bank of Japan, to come out yesterday and basically said that rate hikes aren't off the table, which was likely anyway. CPI in Japan has been on the climb, so it's been interesting to see the developments there. Obviously, wages as well have been increasing, which is the main crux of it in Japan at the moment. Wages growing, it can influence further spending within the economy. So we've seen this kind of uptick there on potential forecasts with inflation. So inflation picture in Japan looking a little bit muddied at the moment, and we're starting to see some of that coming into effect at the moment, with Ueda obviously stating that hikes can still be on the cards. So that's something that's really stuck out for me this week. If we go take a look at the data that's come out in the US as well, we've had CB consumer confidence. Actually, consumer confidence up a lot. We had a revised figure, which was revised from 98.7 up to 99.2, up to 108.7. Now, if we just open this up, this will give you a really good description of what this is, and it's a survey of 3,000 households, and they were asked basically what they think of the future economic conditions, including sort of labour availability, so that's kind of jobs available, business conditions and overall economic situation, which is very interesting to see that it's come out at 108.7, despite things like JOLTS job openings continuing to decline on this downward trend that we've seen recently. So who they're asking this to is quite interesting as well. But I think the market at the moment is just kind of ignoring this type of data. I think we're trying to price in the opportunity of the US elections at the moment, which is very tricky because it's such a coin flip at the minute. And we'll go into detail on that, why it is a little bit of a coin flip at the moment. And because there has been some voting out in America already with regards to the US election. But JOLTS job openings continue this decline that we've seen since peak in 2022. That's kind of coming down in line with inflation. I mean, if you kind of overlaid inflation with this chart at the moment, you'll probably see a very similar chart. We saw that obviously that run up in 2020 to 2022. Then Federal Reserve hiked interest rates to try and cool the economy down, and that's what's been happening. Basically, the labour market has been sort of punished. And if you're familiar with live streams in the past, we have talked a lot in the past about the labour market in the US, and that's where a lot of the problems are at the moment. It's whether that is going to get punished so much that the central bank will have to act. Now, we did obviously see a 50 basis points cut from the Federal Reserve, but they haven't. Well, the market's pricing in the opportunity that there's probably going to be only one more cut to come. And we do obviously go into a Federal Reserve meeting next week, so there's a lot going on next week, as well as towards the end of this week. Looking at sort of the most interesting kind of report that's come out of the US today, Core PCE Price Index. Now, this is the preferred inflation measure for the Federal Reserve. It excludes all the sort of energy and food costs as well, and that actually stayed at 0.3%, and the previous figure was revised from 0.1% to 0.2%. So you would actually imagine this would be a bit more of a lean towards the Fed not cutting interest rates as aggressively. You would typically expect the dollar to be bid off of this. I know the dollar is not bid at the moment, and I'm going to come on to a reason why that could be a little bit later. But yeah, Core PCE Price Index coming in at 0.3%, employment costs, unemployment claims down to 216. Just getting a lot of mixed messages out of the US economy at the moment, but this would be pointing to more stronger figures right now. The past couple of weeks, or the past 3 weeks, the data out the US has actually been fairly good, and the labour market is definitely feeling that. Now, coming up tomorrow, non-farm payrolls. Now, non-farm employment change forecast coming at 108. Down from 254. If we just kind of open up the chart here and zoom back up a little bit, I'm just going to cut off all that sort of nonsense there. So previously we beat it. Now, the estimations were to come in towards sort of 140s, 144s, I think it was last time. Now, I'm going to show you a chart which allows you to kind of predict NFP, and I think NFP can be quite a predictable, let's say, fundamental release, right? It can be quite predictable, and I say that because there are charts out here that can kind of show us that. And one of those is from Equity Clock. Okay, so these are free seasonal charts that you can get. And if we go down into economic data here, you can see employment. And then you can come over to these charts here. So you've got sort of healthcare employment charts. You've got all different types of charts in here. Usually the first one listed is the non-farm employment change. So I don't know why that's not listed there right now. Let me see if I can just quickly find it. Otherwise, I've probably got it screenshotted somewhere. But it's a really interesting chart, especially when I show you the 2023 versus the 2024 and the 20 years prior. We're actually following a very similar path. I mean, look, you've got JOLTS job openings here for one. And, you know, people say that these markets can't be that predictable. Well, you know, look at how closely 2024 and 2023 are aligned, right? You usually start to see jolts, job openings decline, through sort of, from April really. And we've been getting that. We usually see a bit of a peak between June and July. We had that this year, and a top at the end of July through August, now until December. We're kind of seeing that at the moment. So that's something to take into considerations. Going on to, let's try and find this NFP report data. And if I can find it. Here we go. Total non-farm employment seasonal chart. I think this is the one. Yeah, here we go. So look at the price action. Well, say the price action. Look at the trends here. Okay, so the blue line is a 20-year average of non-farm payrolls. Okay, now what I find really fascinating about this chart is if you look at it compared to 2024, which is the red line, and the green line, which is 2023. Look how close this year and last year is following with the 20-year average. Okay, and I think that's quite important to note, because it's not just 2 years or 1 year analysis, right? It's 20 years. Well, technically you've got 22 years or 23 years of data when you include 2023 within this. So I would be expecting non-farm payrolls to continue to kind of make its move higher, but usually we get a little bit of a pause, right? So we're coming into October's figures that we're going to get released. We could see a very similar number to what we saw with September's. Okay, so if we just flick back to that, it was at 254, right? So we could stay around those kind of levels. Okay, now the market's forecasting a big drop, a really big drop. Average hourly earnings also forecast to come in a little bit lower as well. Now, when you're looking at sort of your NFP, you'd be looking at these kind of figures here and be like, okay, well, we're expecting downside to the employment change. We're expecting downside to the average hourly earnings. If that was met with an increase in the unemployment rate as well, you'd be really focused on some dollar downside going into tomorrow. So just to keep an eye out for that. Unemployment rate is actually forecast to climb. If you go off what the Fed are talking about at the moment, they expect the unemployment rate to be around 4.6%, I think, by the end of 2025. So really interesting figures here, though. If we look at I find this chart really fascinating because it, to me, just shows how predictable NFP has been over the past 20 odd years. So whether the election will throw this into a little bit of a different move. I mean, over the 20-year average, you can see we kind of dip a little bit. So maybe we could expect a little bit of downside for the October readings and then a little bit higher up. So let's see how this one pans out for us. But going back to what we've got coming up, we also have ISM manufacturing PMIs. I just don't think that's going to be as important, because when we go into next week, we've got the big data coming up. We've got the US presidential election. We've also got services PMI as well. But as well, if we go to the Wednesday, it's pushed to Thursday this time, we've got the Fed funds rate decision. So next week is going to be a very, very big week. And in the live stream next week, I'll discuss this in a little bit more detail because we'll be closer to the time. But my thoughts on it at the moment is, or the play that I'm really looking at when it comes to the US elections right now is looking at the volatility index and looking to see how that performs at the moment. I predicted 12 days before the event, we should see a spike in volatility. We're starting to get that move. It was very slow burning over the past few days, but we're now starting to see volatility tick higher, which is good. Now, one way you can kind of spot that is by looking at seasonal charts, right? So a seasonal chart that I looked at showed me the volatility index on a 30-day period, okay? And it put the election smack bang in the middle, and then basically showed me what typically happens over the past 8 elections before and after the event. Now, before the event, what it showed us was that the volatility index usually rises. to a point where we see things like the S&P 500 fall, and then you go across the board and look at your risk assets as well. So you could look at, I don't know, like the Australian dollar fall, gold could potentially fall as well going into the event. And then after the event is, I think, where the trade is for me. So if we start to see the volatility index decline, you know, if we go back to 2020 and have a look at when the last election result came in, which was November 2020. So October, September, November, here we go, it's around here, right? So you can see actually volatility was rising before the event. If I just put a little line on here, okay, don't know if you can see that line. Can you see that line on the chart? You might not be able to see that. It's the green line. Let me just change this to a black line, change it to a bright blue, and then we can go. Has that changed it? Oh no, that's the text. 1 second. There we go. So you should be able to see that line a little bit better now. Let me zoom in. There we go. So Tuesday, so this is the 3rd. This is when the election was on the 4th. But look at that before the event, leading up to the event in October, we do typically see a little bit of upside. So this is October into the event. We do usually see the volatility index rise, and then the event kind of comes out and we see this decline. Now this is where I think the trade is for me personally, because when the volatility index falls, we usually see risk assets perform better. So that's like the S&P 500, for instance. And if we're just going to take a look at what's going on in the S&P 500 right now, we are seeing that decline, and that's due to the fact that the volatility index is rising at the moment and the market is pushing higher here. Okay, so this is something that's really interesting to me right now. Now, funnily enough, when you actually see volatility rise towards the event as well, and the S&P 500 become bearish, it does often lead to a change at the top. Okay, so, you know, if we're going to talk who's leading in the polls right now, it's a bit of a coin flip, right? So if I just bring up some US election polls and see if I can find one. So we had one from the Independent a little bit ago. Let's have a little look, see if this has been updated. Right, so let's just bring this in. So if we look at who's ahead in the polls right now, it's Harris. Okay, it says 48%, with Trump 46.7%. But if we actually go to something else, it's called Polymarket, right? Now, Polymarket is where you can go and bet on the elections. Okay, so it's obviously it's more to do with how bookies are seeing the market right now, and bookies usually are a little bit more on the try and pick the favorite, right? So they lose less money essentially, or they're, you know, he's trying to bet against the house, right? So looking at Polymarket right now, Polymarket's actually saying that Donald Trump is in the lead. Let me just zoom into this chart here so you can see it a bit better. So it's got Donald Trump at 65.1% versus Kamala Harris at 34.9%. So bookies markets are actually pointing to something else compared to, you know, compared to what the polls are saying right now. We've got some questions coming in. Sorry, guys, I've just been kind of waffling on. It's the first live stream back in a while, so just going to research them up here. 1 second. Okay, I forgot to talk about the UK budget, but we can go back to that when we go and have a little look at pound analysis. Just nothing. Welcome. What's your anticipated price movement for gold in the near future? Yeah, we'll take a look at gold. I think that's a really, I still feel like it's an interesting market for me right now. I'm not long, and I'm not short either. I'm sitting on the fence at the moment. But I'll tell you why when we jump onto it. So, yeah, let's get onto that. Let's get onto that. Welcome, KMAS, as well. Watching LRHC big goals for 2025 with serious interest. I don't think I'm familiar with LRHC. Is that a stock? Let me know what that stock is. I don't think I'm familiar with that stock, or I'm not familiar with that ticker at least. So let me know what that is. But yeah, really interesting to see the difference here. If I just kind of bring these up. Let's try and get these sort of side by side. So you've got national statistics showing Harris in the lead at the moment. Yeah, bookies and gambling sites have got Donald Trump as the potential presidential winner as well. But it's so tight between the two that I just think it's too hard to call right now. It's too hard to call. Let's go on to the more fun stuff then. Let's go on to the charts. Let's get on to my favorite thing, and you're all going to be very familiar with this, but we're going to talk commitment of trader reports. Okay. I use the commitment of trader reports every single week. They help me find big turning points in the market, and the most recent one that I've traded is the Australian dollar versus the US dollar. I've also been involved with pound Aussie long as well. So let's go take a look at the commitment of trader reports. Now, this is where the fun bit is for me, because the macro stuff is great. I love talking about it. I love commentating on it, but it can be hard to action, right? Whereas you've got the commitment of trader reports, there's data in front of us that we can get really stuck into. Now, the first one we're going to kick off with is the Australian dollar. I've been short the Australian dollar since we had this short signal basically form on the COT reports, which was these highs in here just at the end of end of September, start of October. Just to relate this to the chart for you, let's just bring up Aussie US dollar. Okay, you see this line here that I've got punched in? That is where we had the sort of significant COT signal right towards the end. So it's actually the Tuesday prior, because it's the 24th of September we got the COT signal to suggest that we should be looking for shorts on the Australian dollar. Okay, and I find real value in these commitment of trader reports, to be honest, because I just think that they can show us what's going on. And if we take a bigger picture look at what the COT reports are, right, you've got hedge funds that are in play, which are known as the non-commercial. So they're hedge funds and large speculators. Okay, and then you've got the businesses, or what is known as commercials. Now, commercials do the opposite of what the market is doing, because they are hedging future risk. And then you've got the hedge funds and the large speculators. They are typically trend followers, right? So that's who you kind of want to be siding with. Where I see real value, though, in the commitment of trader reports is when there are extremes that are being met, okay? And when I say extremes, I mean so let's say for this one here, for the Australian dollar, this is a great example of this. If we look at the net positioning, so the net is the difference between the longs and the short contracts, right? Commercials were at levels, so they were net short at levels we haven't seen for a while, right? If I just open this up, the last time we were, towards these kind of levels were back here, where you can see the price action up here in 2021. Also back here in 2017. Okay, so just think about that. They're at short levels that we haven't seen for a very, very long time. Now, we can bring macro fundamentals into this as well. Obviously, there was the Aussie US dollar for me was being bid because of the idea that China was going to bring this huge stimulus package, and again, they failed to do that. There's been a couple of scenarios where this has happened. 2008 being one of them. They were meant to bring this big stimulus package and they failed to do so. And it basically the market's called their bluff again this time, and it's worked out for them. So we've seen a big sell-off in that, because Aussie or Australia are huge trading partners with China. So anything that kind of happens in China is going to have a big effect in Australia. Australia do a lot of business in terms of iron ore and things like that. Obviously, they mine a lot of metals in Australia, and iron ore is a big one of those. And China buys up pretty much all Australia iron ore, and they don't need it anymore. They don't need the iron right now because they're doing so poorly. So we're seeing this being impacted in the Australian dollar market, but it's also here, right? Now, I also think the commitment of trader reports are good fundamental analysis as well, because people that are involved with hedge funds and things like that are people that have usually come through finance backgrounds, okay, and they've been taught a sort of fundamental view on how to position themselves within the markets. So I also think the COT is a bit of a cheat code into seeing that. So if we look at where the non-commercials were positioned at the time, they were net long at levels that we haven't seen really since 2017. It kind of beat the last extreme, which was here. So the most recent extreme, which was these swing highs there back in July, where we saw price kind of fall down towards those swing lows below the 0 spot 65 handle. And then again, back over here, right, where you can see we had this kind of double top on the weekly chart, and the market just completely rolled over at that point. So really like the Australian dollar short that's been felt in the market at the moment. We do have to be a little bit careful again. I'm not in any positions this week so far, because I'm trying to wait for the market to kind of settle and pick a position after the election. So I'm not involved in anything at the minute. But look, we're up at that resistance level as well. So we had a technical level of resistance. We had this sell signal from the commitment of trader reports, and look what happened to price after. That's invaluable information for me, right? If we just go and put that into a chart, just so you can kind of picture how that would look and how you could, how do I trade this, right? How do I take that action? How do I take that information and put it into action? Well, for me, I follow a 3-step method, right? Why, conditions, and strategy, okay? Why is, why do I want to be involved with that market? So simply, sell signal on the COT reports for me. Market was overcrowded. Big signal. Hedge funds were heavily long, and commercials were heavily short. That to me can bring a reversal in price. That's what I want to trade. The second is the conditions. Did we have the conditions met? Now, usually that's a technical factor. What I waited for in particular were a few technical setups to happen for me. The first was I wanted to see price reject a big level of resistance. Obviously, that's up in this area here where you can see I've got that resistance mark. I also liked the idea that we were getting a reversal on my stochastic oscillator. So if we just have a little look here, you can see that the stochastic was in a bullish area in that overbought kind of area, started to dip lower on the daily chart. So after that, and after those conditions are met for me, I just started to look for strategies. Okay, so if we go to the hourly chart, right, all I've been doing is looking at breakouts. See if I can put the what average is that one? I've changed my chart, so that's the 200. Let's get the 50 on here, which is this one. Okay, so what I wait for then is the 50 to be below the 200 moving average. And this is going to sound so simple because it is, right? And then I look for technical patterns to form. Okay, so here, price was moving higher. Let me just change the color of this as well because we're on a white background. So here, if I just zoom in, this was my first entry on Aussie. I actually missed this one over here because that was, I just thought that candle was too big to warrant putting any risk on it. And that was NFP. That was the previous NFP. So basically, I just wait for patterns to set up. Look at this really nice pattern. Broke out the pattern. I got short in here. Waited for price to pull back again. Got short here for a very small profit. Waited for a price to, again, just kind of making higher highs and higher lows, which is going the opposite of what I want to be doing to this particular market. When that changes, so here you can see there's head and shoulders pattern, breakout. That's when you look to continue to trade the market. Didn't trade anything after this because price was very, very close to this support zone, and haven't traded anything since then. But there's been some very good areas to be able to trade this continuation to the downside. There was consolidation in here, market broke out of, consolidation here, market broke out of. If I'm being picky, probably not anything in there, but you could have had a trend line break potential at that point. Again, consolidation, market has broke out of that consolidation. So that's how you can kind of action those particular moves. If you wanted to just be a swing trader, you could have just looked at getting short when you had the signal on it, or this is how I would have done it if I was just trading the daily chart. I like to trade the hourly chart just to give me a better reward to risk factor, but that's what I usually look at for a daily technical condition. So you could have just looked at being involved there, and look how price has moved since that. So this is why I value the commitment to trade reports so much. Vincent's just popped in with a message. I've had one of my best trades from last week, which I'm still holding. Euro Oz long. I like that. No, actually, I was going to say I like that, but I don't know whether I liked the idea of being a buyer of the euro until this week. And again, I'm going to show you why that is. So if we come down to euro, you can see, look, we've got potential long signals here on euro. And why is that? Let's come down and we're going to take off some conditions. I'm just going to show you with the net, okay? So euro's on my list as well for a potential reversal. Now, for me, I've been very bearish euro since the start of October because of the fact that the ECB are cutting interest rates, and they're doing it to prop up Germany because the German economy is doing very poorly at the moment. So, I've been heavily short euro as well as the Australian dollar. So euro was, I guess Aussie was the weaker one out of the two. So you would have seen that upside in euro was on Vincent. So I can kind of get it. My favorite one was pound. I liked Aussie US dollar short and pound longs because pound was doing pretty well. So that's done well. So I'll go show you that in a little bit. But again, we've got a very similar situation here right now, right? So if we look at the long positioning from the commercials, this has surpassed these longs here, okay, which was in June, right, 24th of June. So it's surpassed those contracts. We've surpassed the contracts here that were in April, and look what happened to price, right? Now, it's not the biggest trend in the world, but these are weekly charts, right? So that is sort of 1, 2, 3, 4, 5 weeks of upside. As a FX trader, that's perfect, right? We can get our moves done within that. This second one here was a bit better because it had 1, 2, 3, 4, 5, 6, 7, 8. Big reversal here, but that's at resistance, but about 8 weeks of upside. Perfect, right? Sometimes it's not necessarily all about the quick moves in the market, but it's all about finding a bigger direction and trying to jump on it. This is why I feel the COT reports do this very well. And look, we're coming up to levels very, very similar to what we had back in August of 2022. Now, this is where the dollar had a big decline in the market. But look at this, we're coming up to very similar levels. So this could be a potential big move for the euro, and the election could be the catalyst for this. The election could really be the catalyst for this. If we look at the hedge funds, they're shorting at levels we haven't seen for a very long time. And again, if you think about it, they usually get very aggressive short at turning points, okay? Because they're trend followers, they're speculating, so they're selling into these points. The reason why this is, I feel, an important signal is because we get the report a week late, okay? That's just how it works. We get the report a week late. So you're going to see them selling aggressively, but that's kind of last week's data. So we're trying to predict what's going to happen next. And typically when they go aggressive, they take profits off, market moves, okay? So euro is definitely on the interest for me, Vincent. So let's go to take a quick look at euro Aussie then, because it's not particularly a chart I've been focused on too much because I didn't necessarily like euro upside. But I mean, look at that. That is a great pattern in terms of trend. You know, if we look at the conditions around this market, we had the sell Aussie dollar signal just towards the end of September. So I think it was the 24th, right? 24th of September. Euro dollar did fall a little bit from there, back into this demand zone though. So if I just grab, this would have been my demand zone in here. Markets rallied from that, created this nice little holding pattern here. Almost, you could argue a bit of a flag pattern, right? And once that breached into the 163.50s, I think that would have been a nice trade to the upside. You know, you're coming into resistance now. So if you're holding it, just be very aware that you are coming into, you know, a bearish area of resistance. You know, you can see the market fell quite aggressively from here. So I'd be managing risk at the moment. You know, my stop loss, if I was long in this, my stop loss is probably under this. You know, wait for that daily to close, but I'd probably be tucking it under that daily close if I was up in at 63.50s. But that's a nice trade, Vincent. If you've got in, where did you get in? Sorry, 6138. Let's have a look. 61. Oh wow, you got him right down here. Wow, that's a great trade. Round of I'll give you a round of applause for that one, Vincent. That's a. Did you get in back here, back at the start of October, or did you get in at these lows? The pricing might be slightly different on this. 34s, because that nice little double bottom retest there would have been really nice. Yeah, look at that. Consolidation, market comes in, find support, boom. Move to the upside. For me personally, I would have been looking at sort of these type of moves, right? These kind of breakouts in there. Try and get on it, but that's solid move there. Like I said, I liked pound Aussie a lot because I liked the picture on the pound. The pound for me was a good market to have a little look at. So we were kind of trading within this range as well. And when price kind of closed back within the range here, I thought this was a good market to have a little look at. And prices did continue to move up and hit the highs, which were my overall targets here. But this was a really nice market as well. But if you go and look at Aussie across the board, you would have done really well. You know, if we look at where the sort of COT signal came in, 24th, Aussie Swiss. So you'd look at it the week after. So around here, you know, Aussie Swiss down 3%, 192 pips. Even Aussie CAD. CAD's been really weak as well. Aussie CAD down. Aussie Yen's been the only one that's kind of just gone sideways. So you wouldn't have got anything out of that. Same with Aussie Kiwi, because Kiwi went at the exact same time. Aussie's been a little bit stronger than it, but Euro Oz, Pound Oz, Aussie US dollar, Aussie Swiss, Aussie CAD. You know, that's the markets that were really interesting going forward. Let's flip back. Any questions so far, guys, about the COT reports or anything? We've been going 40 minutes so far. I'm going to try and go. You're going at the double bottom. Wow. I like that, Vincent. I like that a lot. That's a great entry. Seriously good entry. But look, sorry, let me just quickly, I kind of jumped into Euro Aussie, but have a look at Euro dollar right now. Look, if you look at the futures market, okay, because that's what it's based off of. Just have a little look at Euro. Look at that little move higher here. If you want to relate it back to anything, it's just Euro dollar is just the derivative, right? So if you look at Euro dollar, you can see the market starting to break higher here at the minute. If you look at the 4-hour time frame, we've been in this kind of consolidation holding pattern at the 1.08. We've broken that now, back to the upside. So although I find it hard to be a buyer of Euro because of where the market's position, the sort of central bank's position right now, community traders is saying that this could be a potential opportunity, and I put a lot of weight behind the COP reports. So for me, if I get a technical setup or a daily, so for me, where's the daily signal? It was yesterday. So, you know, today I could be looking for potential breakout patterns, but we've just had a lot of US data today. There's a lot of US data coming next week, so I'm just kind of sitting on the fence at the minute. Right, let's go back. So Aussie dollar I like, Euro I like. What's interesting though is this, right? I'm going to show you the US dollar, because there was a long signal, right? Look I'm just going to fold this up here. This is the commercial percentage change, right? Look at their shorts. They've increased their short positions, the commercials have, by 274%. I mean, that is incredible. Now, if we open this up, maybe we can see this. So these are the commercials at the top here. Okay. If we take off the long positions and the net, they're starting to increase their short positions. Now, they can do that in two ways, right? So if you look at the longs as well, they can take off longs and increase shorts. So that's just really interesting. But what was interesting to me, if you come over to the COT extremes page, okay, and the extremes is what I typically trade, US dollar index, commercials are aggressively short, non-commercials aggressively long. That is what I look for in the market. What has happened to US dollar this week so far? We're starting to see a little bit of bearishness coming into the market. Okay, so I find that fascinating. Now, would I be trading this? I don't think so, because of the US election. Like I said, I'm open and honest. I'm sitting on the fence. But I find that fascinating how commercials have aggressively increased their short positions on the US dollar when we're going into an election. I find that fascinating. So that's something just to keep a note of. Another market I really like. Let's go talk about our precious metals then, because although there is a sell signal on VIX, which is what I'm looking for as well. Natural gas, I've been a buyer of recently. 100% signal there. Platinum and silver. Right now, if we look at gold, let's talk a little bit about gold. I know everybody likes talking about gold, but I just don't know where gold. I don't think the gold's where the action is right now, and that may sound silly to say, because gold prices obviously have been rallying a lot recently. But I'm not getting involved with gold, because I just don't think gold is where where the action is. Hi CG, hope you're doing well. So gold's actually down 1.65% today, which is very interesting because the S&P is down as well. Now, if you didn't know, the S&P and gold are fairly correlated. So when the S&P falls, gold can fall as well. That's largely due to the VIX and the volatility within the market, which is rising. I've done a lot of videos about this lately. So if you haven't managed to check those out yet, please do. But yeah, gold moving lower at the moment, but where I think the action is silver for one. Let me just delete all these drawings. These are all old drawings. Now, I'd probably say silver, and I feel like I say this in every stream, but silver was my trade of the year, because I've been long. Well, I was long down from $22 up into $32. I then ended up taking a short position here, got out of it, And then when we look at the monthly chart, there was this nice little pullback. And I really like the opportunity of being a buyer on this. And yeah, price has been moving higher since then. So I really like the opportunity. I really like the opportunity around this area. So let's take a look at the COT reports quickly. Right. So what's going on here? So first of all, look at where the commercials are positioned. They're heavily. Oh, this is silver. This is gold. Sorry, let me go into silver. So I think silver and platinum are where's the action is for me, and where I want to be involved. So I think it's going to be helpful to show you those first. So silver, what are we seeing? Well, commercials are selling at very similar levels to here, right, where I got short in the past. We've got non-coms, so they're your hedge funds and large speculators. The most bullish we've seen in a while. You know, this beat the previous extremes in 2024 at least. If we go back a little bit, similar or approaching similar extremes back in 2020. A bit of an outlier though because of COVID. But we had a similar sort of signal back in 2019 where price dropped as well. So for me, I really like silver to the downside. This is a market that I'm very interested in being involved as well. I've got a sort of technical setup which formed here. Okay. So again, what I'd be doing right now, or what I should be looking for, is looking for areas of demand, areas of supply. You know, you could be looking at this area here as a sort of the supply zone when sellers started to come into the market. You know, just key areas of support and resistance. You know, you've got this 32.46 area as well. But if I'm looking for some decent downside here, you know, I'll always kind of flick up to the weekly chart as well. You know, you've got this nice little weekly area down towards the 28s, which I think could be a good area to go and target. It's a real shame that the election is just next week, because these setups for me are, you know, they're like my tier 1 setups. I feel like these are good setups to have a look at. And if I look at the hourly chart right now, do we have any kind of setup for me? No, because I haven't got the 50 and the 200 crossed over. But I would have been looking for any kind of breaks downside, you know, because, you know, you've got this kind of channel break there, for instance. But if we get any kind of bullish move up, I'll be happily looking at potentially getting involved with silver, because of the commitment of trader reports, basically. Silver being, you know, in these type of positions here. The other precious metal I really like is platinum. I've seen a lot of talk around platinum, a lot of talk around scarcity of platinum and how this could drive platinum prices higher. But platinum is used in catalytic converters. Okay, so, you know, just you can Google that and find that out. So yeah, it's used in catalytic converters. It's also used for jewelry. So it's not really got a lot of uses. Okay. So when I was looking at the platinum chart, I didn't quite believe the sort of hype in terms of its scarcity factor. I know it's very hard to mine, and a byproduct of mining platinum is gold. So, you know, it could be a good way to get some kind of gold out of your mining situation. But yeah, if we take a look at the situation here, look at commercials, aggressively short. Okay, where are they similar levels in the past? Over here back in 2021. Look what happened to price. Okay, yes, it popped up for a few weeks, but look at that move down. Look at where hedge funds are positioned at the moment, very similar to 2021. Okay, I feel like this is really useful information, because I was looking at the platinum chart and I was saying to myself, where would I get involved in this move, right? Let's go platinum. Let me actually see if I can bring in. Let's bring in MetaTrader charts. Let's go to platinum. Okay, so I've been looking at levels of resistance for platinum to kind of get involved with it, and you know, we've got the sort of signal for me that would be okay. I need to start looking at potential downside in these markets now. I tried to look at potentially getting short in and around this 113.50 because this candle here broke to the downside, but then it closed back higher. And you know, commitment to trader reports are not very good at timing things, but they're very good at picking out highs and lows. But just it's a matter of kind of when it happens, not you know, for us. What I'm trying to say is, for us, we have to decide the timing that we get into the market, and the commitment to trader reports are rubbish at picking out timing. But if you look at how price has moved here, it came up into this really nice resistance zone that was formed back in May of this year, and ever since then price has been aggressively moving to the downside. If you look at your 4-hour charts, hasn't really looked back. There's been a small pause here. So again, all I need to wait for now is some kind of pullback, some kind of, you know, higher highs, higher lows. And when they break again, when I look to try and get involved with the market to the downside, as long as this signal remains, you know, I like the idea of targeting down towards these 950 areas. And, you know, we're kind of working within this channel at the moment. So I like platinum, I like silver to the downside. If you want exposure to a potential stock, you can go and look at a company called Anglo. So they're called Anglo American. They are platinum miners, based. It's a UK company based in South Africa. They mine platinum, and it has a very correlated price action to platinum prices. This market could feel a little bit of a slump as well, because of what's going on. I mean, if you just kind of, I can't really I could side by side them, but it's going to be difficult because I've got other charts open. But if you kind of look at the platinum downside that was back here in 2020 down to 2024, right? Sorry, I said 2020. It's the 20th of May 2024 down to September 2024. If we go look at Anglo's performance then as well, so that's the May 2024 down to September 2024. So you've got two correlated markets there. You know, if you miss an opportunity one, you could potentially look at an opportunity on another. So yeah, that's what I've been looking at. I like natural gas prices higher as well because of the commitment to trader reports coming into a bit of support here down at the 28. Gold, I'm sitting on the fence on. I don't think I want to be long, but I don't want to be long. I don't want to be bearish either. You know, looking at the COT reports here, I'm still waiting for that significant extreme that was felt back in 2017. Now, on a net position, they are. I don't know whether it's changed. Let me have a look at the long positions and the short positions against each other. Get rid of the longs there. It's these commercial shorts now. Very yeah, gold is a very interesting market. I think it's getting bought up because central banks are buying it. There's a lot of demand for gold at the moment. I'm interested when retail get involved at massive scales. You know, if I go to, I'm just having a quick look at some sentiment analysis, and I'll see where gold is based at the moment, because I don't think so. I'm looking at retail sentiment, and there's a large volume in gold, but it's 50-50. So yeah, gold for me is not where the action is. So just nothing. Can't give you an answer on that. What I can give you an answer on, or where I feel the market is focused, I like platinum and I like silver. So if you go to Blueberry, XPT over US dollar is your platinum prices. And then obviously you've got your silver prices as well, which I don't have a silver chart open at the moment. So let's just go grab the where's metals, raw metals. Here we go. XAG. Here we go. So silver prices as well. Really interesting market, silver. Like I said, I've been quite proud of my long position in this, down towards the $22 at the start of the year, up 54% on the year in the highs. But yeah, sell signal on the commitment traders is something that I'm going to be taking a look at when it comes to silver. And now that we're seeing this little breakdown here, you know, and you don't have to limit yourself to silver, right? If I just go to this page, let me go up here. Let's go and get silver. Okay, so the most tightly correlated, platinum. Okay, so platinum has a 92% correlation, gold has a 97% correlation. So maybe if you are looking to short silver, then there could be an opportunity to do gold as well. You got TSX60 has a 92% correlation, Cisco System 91% correlations, and I don't know where the tie is here, but Walt Disney has a 91% correlation with silver prices. I don't know quite where the correlation between Walt Disney and silver is, but maybe they own a lot of silver. I don't know. That's quite an interesting thing to see, though, there. Right, guys, we've been running for about 58 minutes. Is there any questions? I know there's only a handful of you that have stayed throughout, but I appreciate you coming back and watching the stream. I know it's been a couple of weeks since we did one of these, or maybe even 3 weeks that we've done one of these now. So they're going to be back again every Tuesday and Thursday. I'm going to be back around the same time, 2 p.m. It's now GMT time because Britain has put the clocks back. We're not in British summertime anymore. We're back to GMT. So 2 p.m. GMT is when I'm going to be doing these live streams again, just before US Open and whatnot. So hopefully you've enjoyed it again. If there's any questions, please let me know. But if not, I will leave it there. And also, guys, feel free to reach out to me in any way, shape or form. We do have the live trading room, or the VIP trading room. If you're a Blueberry client, you can drop me a DM over there. Happy to get back to you there. You can reach out to me on the social medias. You know, I'll reply back to all the YouTube comments. So if you want to come back or ask a question in the YouTube comments, feel free to do so. As well as, you know, you can always get me on LinkedIn as well. So if you just search Jonathan Kibbler, you'll be able to get me on LinkedIn. So thank you very much. Thank you, Hans. Thanks for joining. Thank you. If you're still here, CG, thank you. Vincent, Just Nothing, Kamaz, and Ratish, if you're here, big thank you to you as well. I'm going to try and get these a little bit more structured in the future. I'm going to work on trying to get maybe some sections within the stream. So thank you all for joining me again. Really appreciate it, and I hope to see you on Tuesday. Cheers, guys.